And here on set to discuss where he sees the markets going, Jay Woods is the chief global strategist at Freedom Capital Markets. And with us also to break down the bank earnings in particular is Dory Wiley, the CEO of Commerce Street Holdings. Dory, just first to you, Wells Fargo, what happened?
Well, Wells Fargo doesn't have the robust investment banking structure J.P. Morgan does. So, unfortunately, it got compared to them. But other than that, it had a pretty good quarter. Mortgage pressure is a little tough on them, I think, with the high rates. But, and they're still under a little bit of regulatory strings. But I think all in all, it's actually not a bad report from Wells Fargo or J.P. Morgan. And, in fact, quite the green light for the economy to, keep moving forward.
All right, so you're not super concerned about it. Doesn't look like the market is either, although I know we're kind of at session lows and Wells is down 7%. Dory, were there any broader signals or takeaways so far from what they've said or what you're expecting or looking forward to hearing tomorrow?
Yes. What I'm looking for primarily is, we all expect the net interest income to stabilize because of rates stabilizing and the bigger banks to do better because of the investment banking activity peaking up. In fact, we even got IPO scheduled for August, and which is typically a dead month. But it's really all about loans, right? Do we have loan growth? Then do we have deposit growth? And we're getting that. What's interesting is there was a little bit of net interest income squeeze, which indicates competitive measures on both of those, which is actually good, which means the banks are stepping out and trying to grow and move. And that's a green sign. And we want to see that going all the way down the line in the regionals and the smaller banks. And I think we will. All
right. And we'll hear from Citi CFO in a little bit. Jay, thoughts about the market more broadly here?
Yeah, more broadly, I think the market's doing just fine. And I think the financials being the leader of this technology, obviously leading us to semis today on fire. Thank you, NVIDIA. But to me, watching J.P. Morgan today was huge. The stock has run up tremendously, broke out to new highs, and we see it with Goldman as well. These stocks are telling us that, look, we're shutting off this tariff concern. That is very interesting in it to itself. And then they passed the stress test, the banks did. J.P. Morgan announced a buyback. They're trading fixed income, killing it. Goldman is up 60% from its low. So a natural pullback tomorrow is okay. The net interest income was the one, red flag that we saw, but this wasn't unexpected, wasn't shocking. What was shocking was that J.P. Morgan's investment banking gained 7%. They were looking for a 14% loss. Goldman Sachs is poised. It could split tomorrow. We saw a dividend increase in J.P. Morgan. This is a $700 stock in the Dow. They've never split in their existence. Maybe tomorrow's the day. So I expect more good things to happen. And then the key thing, Jamie Dimon wasn't too pessimistic on the call.
There was a contrarian side? I'm starting.
Yeah, I mean, his concerns were the concerns we all have: tariff uncertainty, geopolitical concerns. There were no storm clouds or no weather analogies. So to me, that's as rosy as it gets when Jamie Dimon is saying, yeah, most of our sectors did extremely well.